Hello and welcome to Trading 5 Talents. In today's video, I am finally giving my results for the Ironfly strategy. Now, just to recap a little bit, the Ironfly strategy is sort of like an iron condor, except the short strikes are at the same strike price. So the way that I'm setting it up is my short strikes are right at the money, both the call and the put side. And then the long options of the Ironfly are 10 strikes further out of the money. Now remember, the Ironfly is also referred to as an iron butterfly. However, an iron butterfly is not the same as a long butterfly or a call or put butterfly. So to make more of a distinction between a butterfly and an iron butterfly, I'm just going by this alternate name, the Ironfly. So it's a little bit clearer, and so it won't be confused with a long butterfly setup. Each of these options for this 4-option strategy, this Ironfly, they're all 7 DTE. So they all have the same expiration date, and I'm trying to go out 7 DTE, 7 days until expiration. I'll be entering daily. However, I am skipping the Big 5 Fed events. If you don't know what those are, I do have a video on that, and I'll leave a link up in the corner of this one so you can see what those events are that I am avoiding. Now, each time I am entering the Ironfly, I'll be entering for about $600 in credit. So it's going to range, of course, according to volatility, but on average, it's about $600 worth of credit, or a $6 credit. And then I exit at one of two places. I'm exiting for a profit at 15% of the max profit. So that's going to be about $90. Or when I exit for a loss, it's going to be about 30% of the credit, which is about $180 loss. So it's a 1-to-2 risk to reward ratio. These are my ideal exit points. But if I'm going to be avoiding these Big 5 Fed events or other binary events, then I'll be exiting my positions early, so it may not be as profitable, or it may not be much of a loss. So it's not exactly at 15% max profit or 30% credit, but I'll show you some of the trades where that happened. Okay, here on Option Strat, I just took a screenshot so you can see what the profit and loss diagram looks like. But basically here in the middle on this price bar, you've got your short strike. So this is a $3.99 put. This is a $3.99 call. These are all shorts. And then on your long side, long call is up here on top of the price, and then your long put is up here on top of the price line as well. So you can see in red, these are my puts. They're 10 strikes wide, and the calls, which are in green, they're also 10 strikes wide, with the short strikes being right at the money. So in this example, SPY was at 398.95. That's pretty close to 399. So that's the at the money option. And when I enter this in, the credit I'm receiving is about $600. And then of course the profit and loss here at the time of expiration. So this is what it looks like on Robinhood as the order summary. You can see that the price is $601, or $6.01 for the credit. And then you can also see that it doesn't recognize it as an iron butterfly or an Ironfly. It just simply lists it as a 4-option strategy. And then, of course, the expiration. But the profit and loss diagram is the same as you see here on Option Strat. All right, so my testing period extended all the way from December 15th until the middle of February. Now, the way that I'm going to represent these Ironfly trades is this triangle right here, where the top and the bottom portions of the triangle are my longs, and then the center of the triangle over here on the right, so it's like a right pointing arrowhead, that point is going to be the center strikes. So those are the short strikes. And the left side of this triangle is when I entered, and then where the triangle ends is what the expiration was. And then I'll point out where I actually exited the trade, at least in just these two examples. I'll just show you two of them right here. So you can see when I enter right here, I'm entering at the money. So my longs are going to pretty much be equidistant from where the current market price is. Now you could see there is a big gap down here in SPY. This is I think a 15-minute chart of SPY, and I'm only running these trades on SPY. I'm not running it on anything else, just on SPY. And then I'm entering each trade around 2 p.m. Eastern time. Again, 2 p.m. is just an arbitrary time. I've tested it, as you'll see later on, with a few other times, and I don't really see a difference, but I just wanted to keep this at 2 p.m. because that's what I was doing all of my Iron Condor trades at. All right, so enter around 2 p.m. at the money, equidistant longs, and then even though there is this gap down, I was able to exit for a profit as the price came back up into my range. It doesn't have to stay in this range necessarily to be profitable, but as it went down out of, approaching this long strike down here, this long put strike, it still wasn't a 30% loss yet. So I didn't close it. And in fact, it gapped up and started moving upward, and it came back into a high profit range. So I was able to exit that one pretty easily. Here is the second one that I entered, and you can see I'm entering right at the money and then equidistant longs, and I'm able to exit right here. In fact, I was able to exit the second butterfly trade, this iron butterfly trade, sooner than the first one because the price really didn't move too much, and theta decay works in our favor because we're selling options, and I was able to get that 15% profit. So again, I'm not going to go through all 30 of them. I just wanted to show you how I'm setting it up, at least on the chart, just so you can see it a little bit better. So these two trades are going to be right here, and so this is my period of testing. So December 15th all the way through, I guess the third week of February, let's say. And you can see SPY, there's some gaps here. There's some strong moves both down and up. It's pretty volatile through this testing period, but overall, this strategy performed really well. So those are the first two trades. And here are the events that I am trying to avoid. So FOMC, Jay Powell speaking, the CPI data, the interest rate decision, the inflation report. So these are the ones that I'm really trying to avoid. And so I would exit before these occurred, and I wouldn't enter my next iron butterfly until after these events occurred. So the first 10 trades are right here. And you can see that, there's a lot of overlap because I'm going to be condensing 30 trades into just one screen, but there is one loss. And so I'm going to summarize it in groups of 10. So the first 10 trades, I had a 90% win rate. 9 out of 10 trades were winners. So here are my second 10 trades. And again, most of these are going to be winners, but there was a little, cluster right here in which I lost, where you had a lot of that volatility in the market. So the second 10 trades, it was a 70% win rate just of those trades. So that brings the total win rate to 80%. So 16 out of 20 trades were winners. And you can see this gap here in which I avoided entering these iron flies because of these events that I wanted to avoid. All right, let's go on to the next. Okay, here are my final 10 trades right here. Again, there's a gap here because I wanted to avoid this one right here, this binary event. And you can see, I'm glad I did because it was a really big move up. Even though I entered after, I was still at a loss for this particular iron fly. So of these 10 trades, again, a 70% win rate. So that brings the total to a 76.7% win rate for this iron fly strategy. 23 out of 30 trades were winners. Now let's take a look at the actual numbers, and so you can see how much I'm actually winning from these trades and how much I'm losing from these trades. All right, here's my Google sheet for the iron fly strategy. I'm labeling it, ATM 10-7, just so it has that same naming style as the iron condor strategies. When I say a 50 delta, that just means an at the money short strike and then 10 strikes wide, 7 DTE, and this is a 2-to-1 risk to reward ratio. It's on SPY, and then all of these are at 2 p.m. Eastern Standard Time. So I made a total of $579 during this testing period, 30 trades, 76.7% win rate. Now, if I would have won at the expected profit taking, 15% profit taking, then I would have made $840.30. But I didn't. I only made $579. And once again, the reason is because I'm exiting my trades regardless of the profit or loss before these binary events are occurring. And so if it's in profit, I'll exit, but I'm not getting the expected 15% return. I'm getting less than that. If I'm losing at the time, I'll still exit, but I'm not losing 30% of that initial credit. So you can see up here in this bar graph, a lot of these are going to be my expected, win amounts and my expected loss amounts. But then here, like a $9 and $15, or way over here, 25, 42, 15, these are lower than I'm expected to win. Also, these losses right here, -42, -24, those are lower than the losses I'm expected to sustain because I'm exiting early because of those events. I group these in 3 different colors because those are, groups of 10 trades. So the orange trades, this was the 90% win rate. The yellow trades right here, the next set of 10 here, I'm skipping some binary events, and I had my 70% win rate. And then down here in green are my last set of 10 trades, again, skipping some binary events for an overall 70% win rate. Now, if we were to, average all of these, the average trade length I'm holding my iron flies for is 4 days. I'm averaging about $65 in profit, and I'm averaging about $130 in losses when I do sustain a loss. Now, 15% profit would be on average about $93, and a 30% loss would be on average about $187. So I'm getting good prices for these iron flies throughout this testing period. I know it's not a large data set. However, I think it is pretty consistent. What I wasn't quite sure of is how often I would win in this strategy. And you can see I'm winning about 75% of the time, just over 75% of the time. So I think that's good because with a 2-to-1 risk to reward ratio, if you win 66.6% of the time, then you'll break even. Anything above that is going to be profitable. And over the course of, a good 2 months, I am winning about 77% of the time. Therefore, this would be a very profitable strategy. Okay, so I want to show you something else. And really, it's one of the main reasons I even started doing the iron condor strategies. And then I'm sort of evolving into the iron fly strategy. And that is because I'm looking to automate this strategy. So let me show you this. So with the idea of automating this iron fly strategy, I have come across a website called Option Alpha, and it's an auto trading service. I'm not going to go through all the details in this video, but I will in upcoming videos. And so if you want to check it out, I'll leave the link down in my description, and it is an affiliate link. So if you do sign up, I will receive a small commission from it. So if you'd like to help support the channel, then please go ahead and use that link if you're interested. But the idea is you would set up your own trading bot and just let it run in the background, and really it would be a very passive stream of income. But in order to do it, you would really need to find a strategy that you could put on autopilot. And I thought the Iron Condor would be a perfect candidate because you're only trading one ticker and you have very defined rules on entries and exits. So once I started doing that Iron Condor testing, I thought it's not working out as well as I would have liked. Plus, there's going to be a lot of commissions once you start trading using a bot, because as of right now, it's not working with Robinhood. So that's why I migrated to the Iron Fly strategy, and I found that I'm making a lot more money with the Iron Fly strategy than I am with a Iron Condor strategy. So let me just show you this briefly right here. On this screen, what you see are 2 bots that I made, very simple bots. One is the 10-7 Iron Condor strategy, and I'll show you again, this testing was back in mid-December all the way until today, beginning of March. And I made a total of $462. Now, this is all paper trading, so this is not live yet. $462. And if I click on this, here are my inputs right here. So 10-7, so you know what that means. And then I'm exiting at 50% profit or 100% loss of the credit. So it's a 1-to-2 risk to reward ratio, or 2-to-1 risk to reward ratio. So you've got some stats down here that's pretty interesting. So again, this is all paper trading, and I'm giving it $5,000 to paper trade. 27 trades have been completed with this bot right now, and it's the exact same strategy that I was using in the previous video regarding the 10-7 strategy. Win rate is 74%, 20 wins, 7 losses, and I'm averaging about $103 per win, or about $213 for a loss. That is good. It's showing a profit. I returned 9.24% in this paper trading account, but it did go through a period down here where it gave back all of its gains really quickly, and then it started creeping back up, and you can see it's having a sharp drawdown right here. So that's not too bad. And as I said in the 10-2-7 strategy videos, that it's good, but I think there's definitely room for some improvement. And the main improvement is going to come by way of how much you're risking each time. So the catastrophic loss is going to be quite large when you scale this 10-2-7 strategy up. So let's take a look at the iron fly. So here with the iron fly, my total profit, well, let's come down here first. My total profit is over $1,800. So my return so far is 36%. Same allocation, $5,000. Of course, this is paper trading, but I've been able to close 40 trades, 77.8% win rate, which corresponds to what I was showing you on my Google sheet. Doing it on Robinhood, 76.7% win rate. But here I've got more data. 10 losses, 35 wins. And then my average win is $119 here and $201 in losses. So overall, the iron fly is definitely a superior strategy to the iron condor strategy. And by, testing it live in Robinhood, as I was showing you with my last 30 trades, and testing it with paper trading for 45 trades here, I think it really is a superior strategy, and I think it really does validate moving forward with this. Now, let me show you again this capital at risk. So right now I've got a lot of capital at risk, and the reason is because I have a lot of open trades. I still have 4 positions that are open. So if I go to my positions page and just show you the closed positions, what you see here, the green ones are the iron condors and these gray ones are the iron butterflies, and you can see the profits and losses from these. But what really interests me with the iron butterfly, and what I think encourages me with the iron butterfly over the iron condor, is the capital at risk right here. So I think this data set shows me 2 things, 2 advantages of the iron fly. First of all, when you open an iron butterfly, look at the capital at risk right here, $405, $380, $365, all right? These are all less than $500. But if you open the iron condors, the risk is much higher for a very similar reward. And so the catastrophic loss is really going to wipe out a lot of your wins on an iron condor much quicker than if you had a catastrophic loss on an iron butterfly. And I did explain that in my previous iron fly video, and I just want to reiterate it here because I think you can see it a lot easier here. The second thing I want to mention is, in order to get, for example, the iron condor, in order to get these amounts, okay, $133 win for the iron condor, $105 win for the iron condor. Look at how many contracts you'd have to open. 7 iron condors, not contracts, I'm sorry, condors. 7 condors just to get that win. Whereas an iron butterfly, you only need to open 1 iron fly for a similar sized win. And so by opening fewer contracts, fewer spreads, you don't have to pay as much commissions, because this is an open and close. This is a round trip trade. So you're going to pay commissions opening and pay commissions closing. But if you have to do it times 7, opening and closing, then that's going to be a lot of money that's going to be taken out of your profits. So that's why I think the iron butterfly is going to be superior, and you can automate it. I think that's a winning combination. So like I said, link to Option Alpha is in my will be in the description, but I'll also go over more videos regarding this service. But for now, I just wanted to point out, because it sort of tied in with the back testing that I was, or the forward testing that I was doing. So let me summarize it once again. Overall, I think that the iron fly are better than the iron condors, at least in my experience. And so this is what works. Wide profit range, high chance of profit. There's very consistent winners, relatively low risk to reward ratio for an option selling strategy. There's no assignment or auto close risk that I was experiencing before. And of course, you can avoid the binary events. Now, I do want to mention though, with the Option Alpha data, I experimented with opening at open, opening the trades at open, at market open, opening them at noon versus opening them at 2 p.m. And I didn't see any difference in the profits. The other thing, and I think this is really important, is that I never avoided a binary event in the Option Alpha data set. I just let the bot auto trade for me, and I didn't exit early, or I didn't stop it. It just did it every single day and closed when it needed to at those, the profit target or the stop loss. So, I still think that's a really good indication that this strategy might be something to move forward with. And as I just mentioned before, this is an already scaled strategy. So you only need to open one to get a very nice profit. And then that catastrophic loss is reduced compared to the Iron Condor strategy. So what are the concerns? The concerns is you're going to sustain a losing streak in a really volatile market. So if the market is really moving up strongly or moving down strongly, then you could sustain a losing streak. So taking emotion out of this strategy is obviously beneficial, and that's one of the advantages of auto trading. You just let the bot do it for you, and then you can take a lot of that emotion out. Okay, so now you can see all of the data for all of my Iron Condor strategies plus the Iron Fly strategy all in one table. And I think what really stands out the most to me for the Iron Fly strategy is this red number right here. So this is the loss per $100 if you took a catastrophic loss and you lost everything on this trade. For every $100, you'd only lose $40. So yes, that is a lot, but it is much lower than all of the other Iron Condor strategies that I've tested. So with a very good risk to reward ratio and a pretty decent profit per $100, so about a 9% return, that I think is a really good combination. So I'm going to move forward with the Iron Fly strategy, and I'm going to move forward in terms of using it with the auto trading feature with option alpha. So there may be some more optimization of this strategy, but as of right now, I've zeroed in on something that I think is going to work very well. So if you have any questions, then please leave them down below and I'll try to get back to them as quickly as I can. And if you want to keep up to date with following the progress of this Iron Fly strategy development and how we can automate it to make more passive income, then please click on the subscribe button and turn on the notifications so you can catch those updates. Until next time, trade wisely and take care.